This week, 4 power-packed webinars lined up for you. By 10 a.m., we have 2 webinars. First, Mutual Funds versus Portfolio Management Service, Understanding the Difference. Second, Beginners Webinar. Mutual Fund is a tool for investment. Following that, by 11 a.m., we have 2 webinars. First, Decoding Healthcare Stocks with Nifty 50. Second, we have Why Insurance, Why M2W. Click the link in description to join us in these webinars. Thank you.
Do you feel like you're losing your cool as an investor? Well, it's not just the summer heat that's getting to you. Markets have made investors a lot more jittery. There's so much uncertainty on the global side, and there's so much going on in the background that many investors are now wondering what they should be doing. And after a long period of calm in the markets and a steady growth for a few years, you're seeing a period of volatility. While this might be normal to some investors, it's got a lot of us wondering about how we can navigate a very challenging year like 2025. One thing that we can take a lot of comfort in is that veteran investors have faced situations like this in the past. It's time for us to actually take some investment wisdom and get a few things right so that our wealth creation goes smoothly through these turbulent times. The first thing that we can do is to understand that we are in a particular part of the market cycle. So if we recognize that markets work in cycles, then we will also recognize that whatever is happening now has happened before and is likely to happen again later, and the good times that you saw in the recent years will also crop up in future years. So knowing that this cyclicality exists and that we are part of that cycle and recognizing where we are and being able to position ourselves for what comes next can really help us make a good investment decision in challenging contexts. One thing that we can take a lot of comfort in is that veteran investors have been in situations like this before. While the context may vary over time, cycles are part of how the market works, and context from history can help us deal with the situations that we have at hand today. So the more experienced an investor is, the more cycles he might have experienced, and this might help them navigate these situations with more calm. And there is a playbook that has worked in the past which could also work for investors today. So the first element of this playbook is to understand that markets are cyclical. The moment we recognize that markets are cyclical, it takes off some of that emotional burden that we're experiencing. It means that whatever tough times we're seeing today has actually occurred in the past and is likely to occur in the future as well. At the same time, the good years that we experienced leading up to this market fall has space in the future as well, which means if we play our cards right, we're likely to reap the benefits of what the market had to offer in recent years in coming years. So as long as we understand the cyclical nature, I think it eases off some of the stress that we feel in terms of whether we're losing too much money today or not. This brings us to the second point, which is we need to position ourselves correctly in this market cycle. If you know that there are ups and downs and these ups and downs are quite natural, then it makes sense to recognize where we are in this cycle. So once we have a sense of where we are, we can anticipate what's coming and prepare accordingly for it. It's not that a cycle can only move in one direction. I think there are many paths that it can take. So an investor needs to be even more prepared for optionalities that might crop up. So preparation is key in this phase. The third thing that we need to look at, based on the fact that so many optionalities may present, is to shift our focus from return management to risk management. Return management has been a thing of the past, where in recent years you've seen stellar returns, so investors chase returns. At this point, we need to chase good risk management strategies, because only when we manage risk effectively can we stay in the game for longer and can we deal with all of the uncertainty that's coming our way. So focusing on risk management in this segment is really going to help the investor come out on top as a winner. The last thing that we need to do is to be selective. Often Diversification is seen as a powerful risk management tool, but in a market context like this, being selective might actually help you come out on top with a winning strategy. So be conscious of what you're doing and make sure that you're making choices that suit you in the best possible way. There's no time like the present to discuss your portfolio and your wealth creation targets. It makes sense to set aside some time to have a serious conversation with your mentor, a professional, or your advisor on what you need to achieve financially and how you're going to go about doing it. If you want some help with product selection, you can reach out to us on the number below and we'll be able to have a productive conversation about what works for you. Now, before we conclude, I'd like to leave us with some wit and wisdom from Charlie Munger, who's witnessed many market cycles and come out on top as a winning investor. It's in the nature of stock markets to go way down from time to time. There's no system to avoid bad markets. You can't do it unless you try to time the market, which is a seriously dumb thing to do. Conservative investing with steady savings without expecting miracles is the way to go. So if you're a conservative investor with a reasonable expectation, this is a market where you can come out on top as a winning investor. Wishing you a lot of investment success. So here's to wishing you a lot of investment success.